Hello and welcome everyone. Our today's session is third series of business taxation, which is be able to calculate VAT and complete VAT returns. Can you hear my voice and can you see my screen?
Yes.
You and if any other person is there? Okay. So before I start, you know that I will quickly review my previous lecture. In our previous lecture, we discussed period of accounting, financial year, taxable total profit, and augmented profit. We also discussed, start and end of accounting period, uh, company residency, expenditure, the allowable in calculating trading. We also discussed capital allowance, property, business income, and relief for property. Then interest under loan relationship rules, chargeable gains, trading loss relief, calculating corporation, and then finally we discussed penalties for late returns and non-payment tax. Our today's main focus on value-added tax (VAT), an important aspect of taxation that affects businesses and consumer alike. So, uh, in our today's session, we will discuss scope of VAT, and its impact on consumers, principles, zero-rated, exempted, and reduced effect of supply type of input tax claims, registrations, and advantages of voluntarily, uh, yeah, uh, advantages of voluntarily registrations, pre-registrations, input tax, deregistrations, and advantages of voluntary deregistrations, VAT accounting and administrations, relief of impairment losses on trade debts, special scheme for small and medium entrepreneurships, and penalties for non-reporting and late payments. So here, uh, our today's lecture with income tax with the normal rates. This one it's the same as our previous lecture. You know, with the normal rates, income tax rates vary depending on income level. For individual earning between £1 and 37,500, the basic rate is 20%, and for dividend is 70.5%. So for those earning between 37,501 and 150, the rate increases to 40% for income and 32.5% for dividends. So beyond 150, the additional rates applies, which is 45% for income and 38.1% for dividend. So this is the same performer basically we discussed in our previous lectures. So personal allowance, everyone is entitled to certain amount for income that they don't have to pay tax on. For the current tax year, the personal allowance is 12,500. Additionally, there is a transferable amount of 1,250 for some individuals. Resident status is again also important in determining tax obligations. Individuals who have been previously resident in the UK may be automatically considered not resident if they have no ties to UK. Conversely, they may be considered residents based on the number of ties they have to the UK. The child benefit income tax charge, if your income falls between £50,000 and £60,000, you will your income if your income falls between 50 and £60,000, you will incur a tax charge, a child benefits received. So this charge amounts to 1% of the child benefit for every £100 of income over £50,000 pound. Okay. So you got it, Zahid? If
Yeah,
anyone, that is same, that perform
right,
or same calculation we have discussed in a previous lecture as well.
correct.
If you remember that, that he's showing same percentage. So percentage rates of like petrol and diesel cars meeting the RDE2 standard are determined based on their CO emission for cars emitted 50 grams per kilometer or less. The percentage rate is 16, 50 to 75, rates 19, then 22, and then 23. So, for company car van benefit, the car fuel benefits. Uh, the base figure for calculation is 24,000 a pound and 100 pound. This is used to determine the taxable benefit for having access to company provided fuel for private use. For van benefits, the scale charge is set at 3,430 and the van fuel benefit is 655 pound. Individual saving account overall investment limit is 20,000 pound. Property tax, a basic rate restriction, applies to 75% of finance cost relating to residential properties. Then it comes to the pension scheme limits. There's an annual allowance, a minimum allowance, and the income limit. So the maximum contribution that qualities for tax relief without any earning, 3,600 pound. So the approved mileage allowance for cars, there are set rates 45p per miles for up to 10,000 miles and 25p over 10,000 miles. So last one is capital allowance. Capital allowance dictate rates of allowances for different assets. For plant and machinery, the main pool allowance is 18%, while for the special rate pool, it's 6%. For motor cars, the rates vary based on CO2 emission. For new cars, the emission up to 50 grams per kilometers to 6% for cars with emission over 110 grams per kilometer. Uh, Annual investment allowance, the allowance allows businesses to deduct the full value of qualifying expenditures on assets from their taxable profits. So the rate of allowance is 100%, meaning businesses can deduct the entire cost of eligible assets up to limit of 100,000 pound. Uh, then cash basis revenue limit 150,000 pounds. So basically, this method allows small businesses to calculate their taxable profit based on money in and out of their businesses rather than using traditional accounting methods. The revenue limit for using cash basis accounting is 150,000 pound. A cap on income tax relief, corporation tax, which is the tax applies on the profit of companies for the financial years 2019. So the corporation rate is 10%. This applies to profit up to 150,000 pound. Value added tax or VAT standard rate is 20%. There are registration and deregistration limits for VAT, which are 85,000 pound and 83,000 pound for deregistrations. Inheritance tax again is a tax, is a tax on estate, property, money, and possessions of someone who has died. The nil rate band is 325,000 pounds, and there is residence nil rate band on 150,000. Uh, the rate of tax on the excess over the nil rate band is 20% for lifetime gifts and 40% for death. Then capital gain tax. Uh, Obviously, as you know, that is a tax on the profit made from selling certain assets. The normal rates of capital gain taxes are 10% for basic rate taxpayers and 20% for high rate taxpayers. So for residential property, the rates are 18% and 20% respectively. Then national insurance contributions are payment made by employees and employers to fund state benefits. As again we discussed previously, there are four classes. Class 1 contribution rate is 2% with a profit threshold of 8,632 per year for employees and rate of 13.8% for employees on earning above 650 thousand pound per year. Then interest rates are important in financial calculations. The assumed official interest rate is 2.5%, while the Bank of England rate is 0.50. So finally, there are standard penalties of tax error which based on taxpayer behavior. For example, the maximum penalties of deliberate and concealed error is 100%, while the minimum penalty for prompt disclosure of careless error is 15%. Again, UK tax system serves several purposes, including funding government expenditures, redistribution, wealth, influencing economic behavior, and promoting social objectives. Uh, Now, describe the registration and administration procedure for VAT. So VAT, value added tax or VAT, is an individual tax in indirect tax that is typically should uh, typically shoulded by the final consumer. Okay. In the United Kingdom, in uh, in the United, it is overseen and managed by HM Revenue and Customs. The collection of VAT is primarily the responsibility of businesses that are registered for VAT. So, as they collect VAT on behalf of the government, businesses that are VAT registered have certain obligations and benefits that are required to charge output tax on their sale, which is essentially the VAT added to the price of goods or services sold. Uh, Also, they can, reclaim input tax on their businesses' expenses. Input tax refers to the VAT paid by businesses on their purchases and expenses. Scope of VAT registration. VAT is not only applicable to goods and services uh, produced, yeah. So, services produced domestically, but also extend to imported goods. Any person who is, changed in a taxable business actively, or who should be registered for VAT, falls within the scope of VAT regulations. One of the key aspects of VAT is its classification of supplies into different categories, each with its own VAT rate. Taxable supplies include standard rate supplies, which are subject to VAT at the standard rate, currently 20%. Reduced rate supplies are taxed at a lower rate, which is current rate is 5%, and zero rate supplies charged at zero VAT. Registration and deregistration. Can you hear me, Zaid?
Yeah.
Okay. So VAT registration can be either compulsory or voluntary. So depending on certain criteria, businesses must register for VAT within 30 days if the value of their taxable supplies exceed the registration threshold over a 12 months period. Or alternatively, they must register immediately if there are reasonable grounds to believe that the value of taxable supplies will surpass the registration threshold in the next 30 days alone. VAT registration and VAT registration decision making. When considering whether a business needs to register or VAT, there are specific criteria and rules to follow. These rules help determine in the business if the businesses makes taxable supplies and if its turnover exceeds certain threshold. Firstly, we need to assess whether the businesses makes any taxable supplies. Taxable supplies refers, to goods or services that are subject to VAT. So if the businesses does make taxable supplies, we then need to consider if these supplies are expected to exceed 85,000 uh, pounds. Okay. So in the next 30 days alone. So this is known as the future turnover rule. If the business does not make taxable supplies or if the taxable supplies are not expected to exceed 85,000 pounds uh, in the next 30 days, then VAT registration is not mandatory. Uh, Registration, voluntary deregistration, uh, and failure of registration or register. So once a business is registered for VAT, there may come a time when it decide to voluntarily deregister. This could be because the value of tax supplies in the following 12 months period is not expected to exceed 81,000 pound as per the Financial Act 2016 here. So in some cases, a business might temporarily exceed the registration threshold. In such instance, traders can apply for exemptions from registration by demonstrating that the threshold has been exceeded. Only temporarily failure to register for VAT can have consequences. Supplies made after the effective registration's date are considered VAT inclusive, meaning the trader must pay the appropriate VAT on these sales to HMRC. So the trader can then seek to recover this VAT from the customers. Tax points or and tax and tax invoices. In VAT accounting, each supply is treated as taking place on the tax point, which determines when VAT becomes due. So the basic point for good is typically the date on which goods are removed on made available for the customer to the customers. For services, it is the date when the services is completed, uh, but there's also the actual tax point, which could be the date when the invoice is issued or payment is made. So if it is before the basic tax point, uh, i- i- if it is before the basic tax point, so otherwise, if the invoice is issued within 14 days after the basic rates, uh, after the basic tax point, the invoice date can also be used as the tax point. So understanding tax point is important for correctly accounting for VAT and issuing VAT invoices in compliance with regulations. Uh, Deposit, advances, payments, and pro forma invoices. When dealing with deposits and advances payments, there may be two tax points to consider. One of the deposit and another for the balance. So the tax point for the deposit is often the date when the payment is made, especially if it is occurs before the delivery of goods or services. Pro forma invoice, which are preliminary invoices provided before the actual VAT invoice, do not impact the tax point. It is essential to wait for the issuance of the official VAT invoice before determining the tax point for transactions. The tax point for deposit and advances payment is important for accurately accounting for VAT and ensuring compliance with VAT regulations. All good? Any issue, question?
No.
Okay, so error corrections reporting threshold. Uh, Reporting threshold when correcting errors in VAT return, businesses must adhere to certain reporting thresholds. If the net error is a VAT return is not deliberate but exceeds the greater of £10,000 or 1% of turnovers up to a maximum of £50,000, it will surpass the error corrections reporting threshold. In such cases, businesses have the option to either adjust the errors on the next VAT return or complete from VAT 652 form report to the error to HMRC errors correction team. Deliberate error must be disclosed separately to HMRC error correction team, regardless of whether they exceed the reporting threshold. The error corrections reporting threshold is essential for businesses to comply with VAT regulations and avoid penalties for incorrect reporting. Different kind of penalties, late return payments and penalty implications. Late submission or payment on VAT returns can result in penalties imposed by Revenue Office. Businesses issued with the surcharge liability notice within last 12 months may face a surcharge for defaulting on payment during the period in a VAT return is not submitted. HMRC can raise an assessment based on their estimate of the owned amount. Businesses failing to dispute this assessment within 30 days may be liable for penalties. Uh, Penalties can also be imposed for failure to keep accurate record. Okay, errors in VAT returns, whether deliberate or careless, and failure to register for a VAT by the required date. The penalties implications for late submissions, payments, record keeping failures, and registration lapses is important for businesses to maintain compliance with VAT regulations and avoid financial penalties. Fraudulent evasion of VAT, fraudulent evasion of VAT invoices, intentionally deceiving HMRC to avoid paying the correct amount of VAT. This can include actions such as falsely reclaiming input VAT or understanding output VAT on sale invoices. Another form of fraud evasion is falsely obtaining bad debts relief or payments from HMRC. Notifications and impact. Changes in VAT legislations. HMRC communicates changes to VAT regulations and procedures through various channels, including bulletins, notices, and their websites. These changes can have significant impact on businesses, affecting their systems, cash flow, and internal processes. Businesses must ensure that they communicate changes in VAT payment amounts and due dates internally to relevant departments. This may involve adopting a computerized system to accommodate legislative changes, which may require support from software, providers. Additionally, businesses may need to inform customers of significant changes that affect them, such as changes in VAT rates, sales, marketing, and accounting staff, should also be kept informed of any changes that affect their rules. Then, contact with HMRC, solving queries and control visits. Solving HRM provides journal advice and answers to queries through their websites and VAT helplines. Written advice is given by HMRC if relevant public notices do not resolve. So, when communicating with clients and HMRC, it is important to maintain a polite and professional manners. Then, control visits by local HMRC officers are conducted to ensure that businesses are applying VAT laws correctly. Then ethics, fundamental principles, principles of professional conducts. Uh, Professionals involved in VAT compliance must adhere to fundamentals, principles of integrity, objectively, confidentially, professional competence, and professional behavior. Integrity involves, acting honestly and ethically, such as not assisting clients in evading tax or providing false information to HM or C. Annual accounting scheme. Annual accounting scheme offers businesses a simplified method of, method for managing their VAT obligations. So to join this scheme, a business's annual taxable turnover must not exceed uh, 135,000 pound, uh, excluding VAT. Once enrolled in the businesses is required to submit only one, month after the end of the accounting years. Under this scheme, payments of VAT are required during the year, with the requirements to pay 1/10 of the previous year's liability at the end of four through end of months 4 through 12. So the remaining, uh, the remaining balance of VAT is paid along with the annual return. It is important that businesses must leave the scheme if their taxable turnover for period, uh, you know, uh, previous 12 months exceeds over 160,000 pounds, excluding VAT. Cash accounting. So, cash accounting scheme provides businesses with a straightforward methods for accounting for VAT based on cash paid and received. To join this scheme, a business's annual taxable turnover must not exceed 135,000 pound, excluding VAT, and all VAT returns and payment must be up to date. A flat rate scheme simplifies VAT administration for businesses by allowing them to calculate VAT due by applying a flat rate percentage to VAT inclusive taxable turnover. So to join this scheme, a business's annual taxable turnover must be 150,000 including VAT. So advantages: simplifies administration, do not need to deal with VAT on purchase invoices, lead to less VAT and discount 1%. Uh, Here then disadvantages: cannot reclaim VAT on purchases and expenses, flat rate applied to all turnover including zero rated and exempt supplies, more VAT may be payable. Professionalism, ethics, fundamental principles. Uh, this involved in VAT compliance must adhere to fundamental principle of integrity, objective and objectivity, confidentiality, professional competence, and professional behavior. So integrity involves acting honestly and ethically, avoiding activities such as assisting client in tax evasion or providing false information to HMRC. Reclaiming input tax. Can you hear me, Sajid? Sorry, Zahid.
Yeah,
Okay. See my screen as well. No issues.
I can hear you.
Okay. So, VAT treatment of businesses expenses. When it comes to businesses expenses such as entertaining and vehicles, there are specific rules regarding the reclaiming of input tax for VAT purposes. Business entertaining, cars and vans, expectations, fuel, scale charge, in input taxes, business entertaining input tax on business entertaining expenses cannot be reclaimed. Input taxes on entertaining staff can typically be reclaimed. Cars and vans, input taxes on the purchases of car and generally cannot be reclaimed, while input taxes on vans can usually be reclaimed. Fuel scale charge, if there is any private use of a vehicle, including fuel, businesses may need to increase the amount payable to HMRC and reclaim input tax on the purchases of all fuel. Additionally, output tax may be taxable if there is a private use of fuel. Uh, so the VAT treatment of business expenses is important for businesses to correctly account for VAT and ensures compliance with regulations and laws. Reclaiming input tax, capital items, we uh, input tax, resolve of purchase, charge output taxes on sale. So basically, input taxes, if we talk about van, is typically recoverable on the purchase of a van, and output tax is charged on the sale of a van. Uh, Most cars input tax generally cannot be recovered on the purchases of most cars, and output tax is not charged on the sales of most cars as they are exempt from VAT. Uh, Partial exemptions, partially exempt traders. So a business that makes both taxable and exempt supplies is known as partially exempt traders. In such cases, input tax must be apportioned between taxable and exempt supplies. Input tax relating wholly to taxable supplies, fully recoverable. Input VAT relating wholly to exempt supplies may be recoverable, subject uh, to minimum limits. So if the total input VAT attributable to exempt supplies is below the minimized limit, all input tax is recoverable. Overseas transactions outside the EU and inside the EU. So basically, exports of outside the EU, exports of goods to destinations outside the EU are, usually zero rated for VAT. Imports of goods from outside the EU are subject to VAT at the same rate as if the goods were purchased within the UK. Inside the EU, when the supplies goods to customer in other EU countries, the treatment depends on the customer's VAT registration status. For acquisitions, goods brought into the UK from within the EU, VAT is usually accounting for by the customers. Keeping records or VAT records. VAT registration, traders are required to maintain accurate record of their transactions for a minimum for 6 years. So these records must include summaries of both supplies made and supplies received, allowing for the calculations of VAT due and enabling HMRC offers to verify the figures on VAT returns. Okay. Calculate VAT liabilities from given date VAT invoices. Invoices required details, simplified and pro forma invoices. So required details invoices must include details such as the name, address, and VAT number of the suppliers and customers. Invoices, numbers and date, total amount of VAT charge, and a description of good or services applies. Then simplified invoices may be issued for amounts not exceeding £250, including VAT, and must contain essential details. Credit notes issued to customers decrease output VAT and decrease the amount payable to HMRC. Credit notes obtained from the suppliers decrease input VAT and decrease the amount reclaimable for HMRC. Uh, Finally, pro forma invoices. Pro forma invoices cannot be used to reclaim uh, input VAT and must be clearly marked as such. Trade discounts and settlement discounts. Uh, Trade discount, which are deductions made before calculating VAT, uh, can be handling using different methods. Invoice discount amount, VAT is calculated on the discounted amount, or invoice full amount, VAT is calculated on the full invoice amount, or invoice both amounts. Clear inductions should be provided to customers regarding the recoverability of input VAT. When another on another hand is settlement discounts impact on the amount of VAT changed based on whether the discount is taken up or not. If the discount is not taken up, future action may include issuing a further invoice for the discount plus VAT, or issuing a credit note for the discount plus VAT if the discount is taken. Bad debt relief. Uh, Bad debt relief is a mechanism that allows businesses to claim back the output VAT uh, that have they have previously accounted for on sale invoices that have gone unpaid and have subsequently been written uh, off as bad debts. So there are some eligibility criteria as well. So to qualify for bad debt relief, the debt must be more than 6 months overdue but less than 4 years and 6 months old. Additionally, the debt must be formally written off in the business's accounts. VAT account is serve as a important link between a business's records and its VAT return. Uh, there are two main types of uh, taxes input. This includes VAT on credit purchases, VAT on cash purchases, bad debts relief, error adjustment, VAT allowance allowable for EU adjust acquisitions and deductions for credit notes for supply from suppliers. Then we will talk about output tax. This includes VAT on credit sales, VAT on cash sales, fuel, scale charge error corrections, VAT due on EU, acquisitions and deductions for credit note to customers. The balances of the VAT account must match the figure on the VAT return. When payment is made to HMRC, it's clear the VAT account ready for the next VAT accounting period. So the VAT account operates ensuring businesses accurately record and uh, reports VAT transactions, facilitating compliance with tax regulations. VAT returns. So there are about 9 boxes. They are, boxes represent the VAT due in the current period on sales, and other period includes any fuel. So box 1 represent the VAT due the current period on sales, and other outputs include any fuel scale charge. Box 2, VAT due in the current period on acquisitions from other EU member. VAT box 3 due is total VAT due is calculated as the sum of the value in boxes 1 and 2. Then boxes 4, input VAT on purchases and other input including acquisitions from EU is reported here. So this box also includes any bad debts relief claimed. Box 5, the net VAT to be paid on HMRC and customs to reclaimed by the businesses is calculated as the differences between box 3 and 4. Uh, Box 6, total value of sales and other total value of sales and another output excluding any VAT, including the figure from box 8, if applicable, is reported here. Then box 7, similarly, the total value of purchases and other input, excluding any VAT, including the figure from box 9, if applicable, is reported here. Then box 8, total value of supplies of goods and related costs, excluding any VAT, to other EU or EC member states reported in whole pounds. And finally, box 9, total value of all acquisitions of goods and related costs, excluding any VAT from other EC member states reported in whole pounds. VAT returns, VAT accounting and submission. VAT accounting is a fundamental aspects of managing taxes for businesses. How it works: VAT periods. Traders are required to account for VAT for each VAT period. So these periods are typically 3 months long, but may extend to 12 months under the annual accounting scheme. Then VAT return completion. A VAT return must be completed for each period, detailing various aspects of VAT transactions. Uh, the box 1, this includes the VAT due on, sales and other outputs, including any fuel scale charges applicable. Box 2, VAT due on acquisition from other EU member state is reported in the box. Box 3, the total of boxes 1, 2 provides an overview of the total VAT due for the period. Box 4, input VAT on purchases and other input is reported here. Uh, box the box 5, this also includes any bad debts reliefs claimed by the other traders. So box 4, then box 5, the net VAT due or reclaimable is calculated as the difference between the value in box 3 and 4. 6 box, total sales and other output excluding VAT are reported in the box 7. Similarly, the total of purchases and other input excluding VAT is reporting here. Box 8 and box 9, these boxes capture the to total sales to and purchases from other EU member states. Uh, Submission deadline. The completed VAT return must be submitted to HMRC no later than the due date specified for the periods. All figures on the VAT returns should be present in pound and pence with whole pounds used for simplicity. These aspects of VAT counting is important for businesses to ensure compliance with tax regulations and avoid penalties for late submissions. Uh, Discuss VAT penalties that could arise penalties. A late submission or payment of VAT return can, lead to various consequences, including penalties and assemblies. So, surcharge traders who default on their VAT returns or payment may receive a surcharge liability notice, which remains in effect for 12 months. Failure to pay with the specified period can result in additional surcharge. Assessment. If VAT return is not submitted, tax office may issues an assessment based on their estimation of the amount owed. Businesses must notify tax office within 30 days if they believe the assessment is incorrect to avoid penalties. Then record keeping are you know record keeping. Businesses are required to maintain accurate record for 6 years. Or sorry, 6 years. Failure to do so or committing careless or deliberate errors can result in penalties, whether these errors are rectified on subsequent returns or reported separately. Inaccurate returns penalty can be reduced if tell HMRC as soon as possible. Penalties may be imposed for submitting inaccurate VAT returns. So businesses can reduce these penalties by, promptly informing tax office for any errors. Failures to register businesses that fail to register for VAT by the required date may face penalties for non-compliance. Fraud, evasion of VAT and penalties, understanding the consequence of fraudulent behavior related to VAT is important for businesses to maintain integrity and compliance. So, fraudulent evasion uh, related to VAT include, falsely reclaiming input VAT or understanding output VAT, as well as falsely obtaining a bad debt relief on repayments. Engaging in such behavior is illegal and can lead to severe penalties. Tax avoidance versus tax evasion, as we discussed in our, the previous lecture, that, uh, tax avoidance, which involves using legal means to minimize tax liability, is permissible tax evasion, which involves deliberately evading taxes through illegal means, is a criminal offense. When we comes to the penalty, in cases of minor evasions, penalties may be imposed. But more severe instance of evasion can result in fines and even imprisonment. Correcting errors, voluntary disclosures. Correcting error in VAT returns is a standard practice to maintain accurate records and comply with tax regulations. So there are different, methods. Method one include on next VAT. So errors can be corrected on the next VAT return if they meet certain criteria. Here is the criteria. The error amount is no more than 10,000 pound. If the error is between 10 to 50,000, it should not exceed 1% of the turnover of for the current return periods. So the error are not deliberate. Then it comes to the method two. Alternatively, you know, errors can be corrected by submitted form, VAT, as we discussed previously, 652 form, or writing a letter to tax office or, HMRC. This method is suitable for errors that do not meet the, criteria for correction on the next VAT returns. Then disclosure criteria. Another thing is error exceeding 50,000 pounds or exceeding 10,000 pounds, and more than 1% of the turnover for the current return period, or deliberate errors must be separately disclosed to the tax office or HMRC. Here are some videos if you wanna that watch regarding some more information about tax. And Osborne book tax, that Osborne's books for normally write books for IFA and for AAT. So you can visit for further tax or knowledge. Yeah, that's it for today's Aith. Or if anyone is any question, concern, or any issues.
No.
Okay, thank you very much. And tomorrow, 11 o'clock, there is a last session of business taxation series, which will be assignment session. Okay.
Okay.
So thanks, Zaid.
Thank you very much.
For
Thank
joining
you.
me, and see you tomorrow at 11 o'clock.
See
Okay.
you soon.
And
Okay,
if
thank you.
any question, concerns, issues, you can drop me an email at yasir@ukversity.co.uk. Okay.
Thank you very much, Yasir.
Thank you, Zaid. Thank you very much.
Thank
Bye
you.
and good weekend. Bye.
You too.